Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. The V-top over the middle of May drove this market lower until mid-August, down through 3 important congestion zones which became important resistances once again. We have overhead at 97.50 to 99.95, then between 93.95 to 96.06, which is very relevant right now, and most recently a smaller one between 91.83 to 92.56, which saw the market push up through last week and is now back as a support. Low, we also have support from a combination of 50% Fibonacci line of July 2022 to May 2023 move at 90.29 and the gold highlighted long moving average currently at 91.05, whilst above we have the green short medium moving average currently at 94.09, which is the gateway to the previously mentioned overhead congestion area 93.95 to 96.06. We are today testing up into this area such that the previous bracketing of the market for the last week and a half or so between the overhead green short medium moving average and the gold long moving average below is right now being tested. We're being tested to see if it will breach. Further above the 93.95 to 96.06 congestion, and before the next one at 97.50 to 99.95, we have the roughly flatlining medium moving average currently at 96.73. LME 3-month aluminium. The move higher over March, April, May, and I suppose even the most recent one from early August to date originates back in late February, with the market breaking higher from a diamond pattern type formed between late October 2023 to late February 2024. Now please remember this pattern as it is the congestion generated by this diamond pattern type formed between late October 2023 to late February 2024, and that's between, on the wide, 2100 to 2400, but really between 2156 to 2297. And that's caused the very recent rise, though obviously not the pattern itself. Okay, so going now to the peak in late May, the market back then made new recent highs, but at the same time sowed the seeds of its own bullish destruction by making a 2-day pipe top that was also part of a larger 2-week horn top. Prices in essence moved lower with a small halfway hesitation in early June and a larger one over mid-June to mid-July till the end of July, when the decline was stopped by the extension to the neckline currently at 22.26 of the June to July 2023 reverse head and shoulders neckline pattern. From this base, prices started to build and experiment with moving higher. Thus, we have been back up until last week in the same price zone as the earlier diamond bottom pattern, roughly between 2400 down to 2100. Over early to middle August, the market constructed a small ascending triangle pattern, reaching the primary and secondary targets on the upside. In the process, the market pushed up through some significant resistances, now turned into supports, notably the long moving average currently 2370, the twin neckline extensions, the October 2022 to May 23 head and shoulders top currently at 2325, and the March to May 2023 head and shoulders top neckline, which is currently at 2338. Also the 50% Fibonacci line of the December 2023 to May 24 move at 2454, short medium moving average currently 2419, and last week the mauve highlighted medium moving average currently at 2498. On Friday, prices also reached and closed just over the significant bright red highlighted middle time, currently 2531. We're also within the congestion of the mid-June to mid-July bearish half hesitation, roughly between 2470 to 2563, and the congestion around the May low between approximately 2508 to 2536. At the moment, the congestion in the current area seems to have slowed the ascent of this metal. But I would be interested to see how the market continues to treat the bright red middle time and the mauve medium moving average. Above these, we have various spread out congestion levels you can see on my daily chart, but I'll point out the early July high at 25.62, the December 2021 low at 25.81, especially the purple middle time currently at 26.23 of the bullish Andrews pitch hook, with the same move as the bright red pitch hook between mid-December 2023 to late June 2024. LME 3-month lead. I said here 23 weeks ago, and I quote, "I suspect the key overhead resistance will be the same as in late January, the congestion between 21.82 to 21.89. Please remember," end of quote, please remember this quote, or rather remember that 21.82 to 21.89 level, as it will become relevant again. So in late May, the market broke out of its previous bullish pattern and created a horn top over late May, which was the high point of the recent move upwards. Moving into June now, and we saw prices fall, reaching the primary and secondary targets for the horn top. The market continued to drive lower down through a wide band of congestion originating from April between roughly 21.35 to 21.86. Congestion area that is now overhead, and one which we are edging towards right at this time. This area has the gold long moving average currently at 21.34 and the 50% Fibonacci line, the March 2020 to March 22 move at 21.35. Further up, we have a resistance band between 22.13 to 22.25, tested and even breached for a while in early July. Then the flatlining medium moving average currently 21.69 before we hit the next overhead band, congestion between 21.60 to 22.25, made up from the specific levels 21.60 to 21.90 and 22.16 to 22.25, consisting of the lower trendline extension, currently 22.16, to the May to June 2021 descending triangle, and the 50% Fibonacci line of the whole of the 2022 move at 22.25. I have to say right now, this looks a formidable piece of overhead congestion, but there is one feature developed over late July to late August that might help at least pierce it. You see, we have over this time formed a possible reverse head and shoulders pattern. It is far from a pretty one, and I am loath to even mention it, but it does exist. And last week prices broke up over the bright red neckline, currently at 20.43. This break higher gives us a primary target X in the 21.39 area and a secondary, harder to reach target X1 up in the 21.77 area. Target X is close to being reached, though it is right at the start of that 21.35 to 21.86 congestion area. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.